Hello, my name is Mru Patel. I am the partner and CEO of Sapient Group and partner and COO of Flash Group. For the last so many months, lots of my friends, investors have been asking me, what are the tips, tricks in getting into investing in crypto and blockchain business? Where do you find them? How do you track them? What kind of analytics, what kind of tools you use? So I'm going to share you some of that, but just a little bit about me. And let me start sharing some slides that I've just made of a little bit about myself and this channel. So first and foremost, this is not financial advice, but I'm going to help you and do your own due diligence in how to get into this market. I have interviewed, been on stage with, influenced over the last 3-4 decades with some of the biggest people in the market, not only in the crypto business, but in the blue chip tech business. With my background, Google me and look at it by all means. I have, in the crypto space, been on stage with and spoken with and done fireside chats with some of the biggest people in the industry. And I've been trading for more than 3 decades, from stocks, Forex, the dot-coms, from angel investment, all the way through to now for the last 5 years in the blockchain and the crypto space. So with that comes a lot of experience. And the first thing I'm going to say is, again, this is not financial advice, but if you've been trading Forex or stock market or anything along those lines, don't think the same principles apply. I know there are tons of analysts and people who are constantly doing predictive tools and looking at candles and Fibonacci's and Bollinger Bands and all these tools and patterns and charts. Yes, they work, but that is not the be all and end all. In the crypto space, a lot of the parameters are controlled with things that are outside the tools and analytics that you see and hear about from all the usual people out there in the marketplace. And one thing I must say is this market is so volatile that if you just look at it in the past 4 weeks, 5 weeks or so, at the time of this recording, the market of just the crypto market cap has gone from 1 trillion to 1.8 trillion, and Bitcoin has on its own become a 1 trillion market from like a 300 odd billion. So it's grown so big, so fast. So with that comes a lot of risks, and with that comes a lot of uncertainties. And the reason is because this market is by far unregulated. And what that means is be careful. If you're new to it, don't go on any unknown exchanges, don't go on any unregulated platforms. We are a licensed financial institution with a licensed exchange and a licensed wallet. So look for those big types of exchanges which are licensed, because then at least a portion of this will be safe. There's the old Mount Gox story, so go out, Google it and find out. The other thing is there are over 8,000 and now counting to even bigger if you count the DeFi and the NFT space, because there are so many tokens being minted in the new era. So how do you go about finding it? How do you track it? How do you go through doing your due diligence, whether the token and the mechanics and the people and the structure is right? I would say look at some of the old traditional ways of doing due diligence as well. This is probably by far the best indicator chart that I can say, should you get a gauge for what's happening in the overall market. So in the Forex market, there's usually a blueprint index or a currency that people say how they are performing. So it's against a dollar or a Dow or a NASDAQ index, something along those lines. And you see how you perform against that. And if you're in the hedge funds or investment fund or a REIT or something like that, there are the Morning Stars and Fidelities and all these other indices that you get how they perform against a common performance. So sorry about that, in the crypto space, one of the biggest issues and one of the biggest things that most people miss out on is they always say, oh, my BTC is worth X dollars, and my Ethereum's this, and my Ripple's this, and Cardano is this, etc. In this space, compare it in performance with BTC or a Binance coin or an Ethereum or something like that, a big currency. So you won't be trading against something that's outside the market as such. So take that as a tip to see how you perform against other coins or blueprint type of coins. And Bitcoin being the king of all coins is a good one to do because most altcoins correlate with how Bitcoin performs. In terms of this chart, let me just go through basics. Whenever there's been a halving, the price over here with the blue circle, it goes down. But soon after the halving, the price shoots up. And where you've seen the blue mark where it's gone over the red line of the rainbow, that means you are now into a bubble situation, hence why it's corrected. So the middle over here is what I call between the yellow and the orange. This territory exactly in the middle is where people think, is it a bubble? Is it a FOMO? Is it going to intensify? Best thing to do over here is to hodl. Hold your coins. Don't do much, okay? Because it then becomes a supply and demand game. So if you think what happened after that in 2015, it dived again up to the halving. Pretty steady, dived again. But at the halving, again, it started shooting up. All right? It touched the red again. That means, again, bubble situation, comes down again. Gets to another situation like that, which was just a couple of years ago, or a year and a bit ago, and again it came down. So at the end of 2020, where we saw probably a very low price around the 3,000 mark, the halving went and now we are at nearly 60,000. Okay, this chart on the left hand side does not relate to scale with the pricing, because otherwise it wouldn't fit and it wouldn't look pretty. So we are now at a stage where it's a borderline between, whether the FOMO is intensifying and whether it's a real bubble and whether to sell. My personal view is I think Bitcoin now, because it's got a lot of institutional money, a lot of whales coming in, a lot of large investment funds, including ultra high net worths like the Elon Musks, the micro strategies, and all of these have put almost 20 billion into the market just over the last 12 months. So a lot of new funds have come into the crypto space. And with that comes manipulation, for one of better words, of the whales and the organized pumps and dumps work. We've seen it with GameStop, and this happens a lot even in various Telegram chat groups, etc., with the pumps and dumps. My personal advice, stay away from them, and I'll talk more about that. So don't always depend on tools and analytics and patterns, okay? There are various places you can see whether it's alt season or Bitcoin season, and based on that, you will see which market, whether it's the alts or the Bitcoin, will likely outperform the other. So look at some of these. For those of you, and there are tons of these sites, for those of you who want that, please like, comment, share, subscribe, and say what kind of details you would want, and I will provide that in the following videos. By all means, this is for more educational reasons as well. So all these websites where you can get some what I call market sentiments and market sensitivity are more important in my view than just following the candlesticks, the Bolly bands and the MACDs and Fib and all of these things, which, as you can hear from my tone, I'm not a great fan of those. Yes, they work, but it is not the ultimate. Okay. Because I think the external news, the market whales, the pumps, what is happening in trades, who's dumped a big amount, who's bought a few amount, how many miners are dumping at one stage on a certain coin, that tells you there's a lot of supply there. Things along these lines matter more than the candle types of analytics, okay? My next tip would be, because it's so volatile and uncertain, stay away from margin types of trades and leverage trading. And if you are going to do that, don't do more than 2x, 3x maximum, because you could easily jump up and down 10, 15% in a day. And if you haven't put what I call the limit orders, the limit sell orders, the trailing stop losses, and all of these risk management measures in the system, so that platform you're using must have some of these. And if you haven't put that in, you could very much lose. I can give you a case in the 90s during .coms. I lost tens of millions because I was flying around and we had to phone brokers and we're not there and it starts crashing. So, nowadays, a lot of this is automated and at very low cost. Stay away from the big fee charging types of platforms, and there's plenty out there. You just need to see them. Okay, the ones who advertise the highest, dare I say it. Then look at what I call the day trading type of strategies, a holding type of strategies, and a balance of your portfolio type of strategies. What I mean by that is, don't put 100% of your savings into crypto. 5, 10, 20, 30%, depends on what kind of risk averseness you are, how you can afford to lose it, or what stage in your life are you at? Do you need to retirement money? Do you need passive income money? So balance all that out based in your personal situation, and then apportion your whole portfolio to say this will be hold. So in that part, you would only put that these are dead certs, which I would say in the long run, they have a stable environment in terms of the amount of liquidity, volume of trading, performance. Don't look for the 3x percentage performances all the time. So something that will kind of like not lose all your money. Okay. So Bitcoin is one of them. Ethereum's another one, but be careful with some of the rest. Okay. In terms of also diversifying in your savings, I would also say, look at the my top disruptive types of technologies. So in that, what I mean is technologies that are currently to do with what people post-COVID have really realized that's important. So health being the number one, you cannot buy health. Health is the new wealth, as I always keep saying. So anything that is doing cutting edge biogenomics types of projects, COVID-based projects, reducing and curing cancers and diabetes, stem cells technology, these kinds of companies you need to explore and research. On the other hand, if you don't understand it too much, then stay away from things you don't understand as well. But if you understand it a little bit, then look at the typical indicators like the price earning ratios, when it was released, what they've got in the pipeline, what is happening with the company, what are they in the middle of doing, are they going to change radically the way things are being done currently, basic things like that, and then make a judgment call on the analytics side of it. Okay, so first it's basic do your own diligence in that side. The second big disruptive area I say is 3D printing. And nowadays it's not only buildings, that are being done, but even internal body parts are being printed. So there are so many examples, from limbs to internal parts being printed now. So that is a new tech area which you can imagine how useful and beneficial it is. So people doing this is a good place to look at it. The next is the whole area of AI, blockchain, robotics, machine learning, automation, these kinds of things. Because what COVID again has taught us is, people are working a lot from home, staff are being laid off, and people need to be more productive somewhere, somehow, through alternative ways of disrupting their own business. So where the traditional bricks and mortars business, even in the 90s, during the .com days, I used to say, to Toys R Us and all these other big companies, banks, retail outfits, Woolworths, some of the people I talked to saying, you guys won't survive unless you go online and take it from us. I was at Sun Microsystems at the time. You must go and get online. Look what's happened to them. And now with COVID, it's even forced it where people are having to do businesses online. So with that comes just-in-time distribution. So the Amazon model. So the Amazon model is what's being created by a lot of the retailers now, and distribution is another requirement. So those kind of companies will thrive again, because at the end of the day, people need products to eat, drink, live, buy luxury goods or even essentials. And that is physical products has to be distributed somehow at the most cost-effective way. So cutting that middleman layer out are the kinds of companies you need to look at. And typically people who are doing it through the blockchain is even better. through mobile wallets is better, and through contactless ways of payment systems is even better, because that's where it's all going. Finally, the last tip I'll leave you with is what I keep mentioning every time: try and avoid those pumps and dumps. And I have a whole video on this 10 Ds, my 10 disruptors. So look into the channel and find that video, and I go into more details about that as well. So portfolio management. I touched a little bit on this, but let me tell you another tip. Don't be greedy. Take profit. You know, greed is very bad. It's so easy to be caught up in the FOMO. And people think, oh, this has gone up. Bitcoin is now 60,000. Will it go to 75,000? Because I hear lots of people calling it 75,000. My advice to anyone is, if Bitcoin is in your trading pot, trade at least some of your profits back and keep the rest in hold. But that's a hold. But if you have some of the altcoins or the new registered coins, which is even higher risk, you know, competition is so bad just now in this market. I cannot even stress it any further, because those are the ones you need to really be careful with, whether you're a short, medium, or long position holder, based on the due diligence I said earlier, because on the people, the team, their commitment, what's in it for them, are they sharing the economy? And I have a model for this. I have a disruption model, which I talk about in other videos, and we'll do another big video on that. Is for the last so many years, I said, you know, socialism and capitalism is out of balance. Give things back to people. And those are the models that's going to disrupt the world next. So socio-capitalism is the phrase, and wealth should be spread across everybody and all the stakeholders, rather than the super 1% or less than 1% wealthy. So if you look at the Amazon, the eBays, the Google, and the Facebook specifically, you know, we are their product at the end of the day, yet the profit is not shared with us. So the model going forward is people saying, you know, if you are going to eyeball our content, we will pay you something towards it. If you're going to share something, we're going to pay you for this. And we're building something along those lines to look at that as well. Okay. So with that said, this is not financial advice, but go out, do your research, follow that rainbow, and follow real market sensitivity and due diligence before you go into this business. If you need more details on more of the tips or any of the subjects, leave a comment and I will surely make some video on that. Look forward to it. Have a great ride. Stay away from big leverage in this climate, because it's extremely volatile. Bye. Don't forget to hit the subscribe and the alert.